Hello everyone, and welcome to Bitwise Insight. Everything you need to know about crypto in 5 minutes or less. In today's episode, the Bitcoin halving. What it is, why it matters, and what it means for prices going forward. What if I told you that the amount of new oil being produced each year was about to fall in half? Or if I said that 50% of all gold mines were halting production effective tomorrow? Or that farmers all across the world were about to plow under 50% of the world's wheat? You'd be pretty bullish, right? After all, commodity prices are driven by supply and demand. If supply is cut in half and demand stays fixed, well, it's easy to figure out what that should mean for prices. I bring that up today, of course, because later today, Bitcoin is going through its quadrennial halving, when the amount of new Bitcoin being produced each day is cut in half. What does that mean? It means that for the past 4 years, Bitcoin miners have produced about 1,800 new Bitcoin each day. And starting later today, that number will drop to 900. Now, historically, these halvings have been preceded by significant bull moves in Bitcoin's price. Bitcoin ran up roughly 9,000% in the year following its first halving, and nearly 3,000% in the 18 months following its second. Will we see that kind of bull run again? Let's take a look. 900 Bitcoin is worth about $8.5 million. And since most of the Bitcoin produced by miners gets sold immediately to cover the cost of mining, starting tomorrow, you can expect miners to sell about $8.5 million less of Bitcoin each day. Now, on the one hand, that's not a lot. Bitcoin traded roughly $2 billion yesterday, so 8.5 million is less than 1% of daily trading volume. But zoom out a little and it gets more meaningful. On an annualized basis, the halving will remove $3.1 billion in sell pressure from the market each year. To put that in perspective, we all got really excited last week when Paul Tudor Jones, the legendary hedge fund investor, announced he was going to buy Bitcoin in his hedge fund. That fund has about $4.5 billion in assets, and Jones is targeting a low single-digit allocation. Let's call it 2%. Multiply that out, and we expect him to buy about $90 million worth of Bitcoin next year, which is great. But the halving is equivalent to 35 Paul Tudor Joneses per year. You get a new Paul Tudor Jones roughly every 10 days for the rest of time. The big question, of course, is it priced in? We all know about the efficient markets hypothesis, the idea that the market will reflect all known information about an asset. And the Bitcoin halving is certainly known information. After all, you're watching this video. There are also literally hundreds of websites that exist exclusively to count down to the halving. This is a screenshot of one taken from last Friday. So surely the halving is priced in, right? Well, maybe not. My own view is that it's like the proverbial iceberg. People see the surface, but they underestimate the depth. $8.5 million a day may not sound like much, but $3 billion a year clearly is. I hear people who say, the halving isn't much, it's only 1% of Bitcoin's daily trading volume, but I don't think they're thinking about it right. Think of it like this. On a day where Bitcoin trades flat, buy and sell pressure in the market is 50-50. Remove $8.5 million in sell pressure, and suddenly that split is 51-49. Now, people are bad at mentally modeling compounded returns, but if you compound that 51-49 split over every day from now to a year later, it really adds up. I should say, of course, that there's a good chance Bitcoin will pull back after the halving in the short term, either because people sell the news or because miners feel pressure from the reduced reward. Bitcoin didn't pop immediately after the first two halvings either. It took a year or more for the bull run to take place, and I expect that pattern to continue. But long term, I think the impact will be significant. Now let's sum up with 3 key takeaways here. You're going to hear a lot about the halving in the coming days, about how it impacted prices and how it didn't impact prices, about how Bitcoin miners reacted and how they didn't react, about how it lowered the network security and how the hash rate is actually at all-time highs. Don't listen to all that. Just remember 3 things about the halving. First, starting later today, there will be $3.1 billion less in sell pressure each year, 35 Paul Tudor Joneses from now until infinity. Second, the impact won't be immediate. Halvings have historically preceded bull markets, but their impact has played out over a year or more. And finally, the halving is a reminder that Bitcoin is becoming more scarce. In this age of infinite QE, Bitcoin is going the other way. And that's it. That's your Bitwise insight. For now, this is Matt Hogan, Global Head of Research for Bitwise Asset Management.